Today, I want to talk about what bridge financing is and when you should consider using it.
Bridge financing is simply a short-term loan that helps facilitate the completion of a transaction. The term bridge is used to illustrate that what you're trying to finance has a clear and definite beginning point and ending point. In many cases, bridge financing is sought to complete a transaction quickly so that more suitable long-term financing can be secured over a less compressed period of time. In other cases, a bridge loan is strictly used for completing a transaction whereby, when the entire transaction has successfully closed, proceeds from the transaction will be used to pay back the bridge. Alternative debt financing programs like factoring, inventory financing, purchase order financing, private mortgages, and other forms of alternative asset-based lending are basically bridge loans in disguise. The key characteristic of most bridge loans is that they are a more expensive form of debt financing, but that they can also be put into place rather quickly and are designed to manage the risks associated with an incomplete transaction. In order to secure a bridge, the borrower typically has to have something of value to pledge that the bridge financer would be interested in taking as security. The most common form of security is real estate. A bridge secured by real estate can potentially be used for all sorts of purposes, in that if the underlying transaction or activity being funded is not successful, the lender will just realize on the real estate. Other forms of assets can be used to secure a bridge, but in many of these cases, the lender will require possession and potentially legal control of the assets to protect their interests, which is why real estate tends to be the security of choice. In terms of when to use a bridge, you need to go back to the earlier definition. The transaction or application of capital must have a clear beginning and end. If you can see clear to the other side of a transaction, and all that stands in your way of a profit or ownership of a long-term appreciating asset is capital, then a bridge should be considered. As long as the return potential of the transaction is greater than the cost of the bridge, a short-term bridge loan may be a very shrewd financial decision. The reasons why bridge loans aren't considered more often is, number one, individuals view them as too expensive, and number two, people think that lower-cost financing should be easy to come by. There is no question that bridge financing can be pricey. This is opportunistic-based lending that takes full advantage of the time pressures that cause deals to fall apart when traditional financing can't be secured on a timely basis. Which leads into the second point. Commercial financing for any type of transaction that is not straightforward is almost never easy. The process can take way more time than you think, and even when you get a commitment to fund, there can be several conditions that need to be met before any funds are advanced. The notion of easy to secure financing kills more deals than you can imagine. And that's why bridge financing should always be considered either as a backup plan or a short-term form of financing that gets the deal done and buys you time to find a more suitable long-term business financing solution. From a cost point of view, which would you rather have, a smaller return or nothing? Some people would say they will take a smaller return if they had to, but don't spend any time getting a bridge financing contingency in place because they are so focused on getting traditional financing locked in by the deadline. So in many cases, they end up with nothing. Personally, I wouldn't use bridge financing if I didn't have to either. The trick is knowing when you need to bite the bullet and pay the piper versus running out of time and driving your deal over a cliff. Definitely something to consider when a deal is at risk or not closing.
So if you have a business financing problem, challenge, or requirement that you need help with, then I suggest you give me a call or send me a note at the contact information at the end of this video. And I'd like to wish you all the best in your business financing endeavors. Take care.